Welcome to Amplify Asia. If you are watching this, you might notice something a little different today. That's right, we are officially on video. After a whole series of audio-only episodes, Amplify Asia is going visual. So if you're one of our loyal audio listeners who's made the jump to watch us today, welcome to the new era. Today we are diving into something that every business in Hong Kong needs, but far too many people underestimate: opening a corporate bank account. Here's something that surprised me when I first heard it. Some businesses in Hong Kong wait up to 3 months just to get a corporate bank account approved. Meanwhile, their competitors are already trading. Today we're going to make sure that doesn't happen to you. To help us do that, we've invited someone who deals with this question every day. Joining me is Po Chan, Business Development Director here at Acclime, Hong Kong. Po has a deep experience helping companies navigate corporate setup and banking across the APAC region. Po, welcome. It's a pleasure to have you with us. I have to say you have the slightly terrifying honor of being our very first guest on video. How does that feel?
Hello, Anne. It's good to be here. Honestly, Anne, I had absolutely no idea I was signing up to be a pioneer when you invited me. But I'm truly honored. And I'll try my best not to look too nervous on camera.
You are doing brilliantly. And honestly, there's no one I'd rather have to kick off this new chapter. Because banking is a foundational question for every business we work with. Let's get into it. Let's start right at the beginning. For someone setting up a corporate bank account in Hong Kong for the first time, maybe they're a new resident company or an overseas business entering the market, what are the fundamental differences between a virtual bank and a traditional physical bank?
Great place to start. And this is the question I get asked most often, because the answer has a really big impact on how quickly you can get your business running. At the highest level, you have two very different worlds. And here's the thing. Choosing between them or figuring out how to combine them is probably the single most important banking decision you'll make. Let's start with virtual banks. Hong Kong has 8 licensed virtual banks. Names like ZA Bank, Levy Bank, Mosque, and Air Wallace. Their biggest selling point is speed. You can often have an account open and operational within 1 to 3 business days. Everything is online. Video KYC, e-signatures, no branch visit required. Minimum deposits are very low, often 0 to 10,000 Hong Kong dollars, and there are usually no monthly fees.
That sounds almost too good to be true for a startup. Open in 3 days, no minimum balance, no branch visit. What's the catch?
There's always a catch. Virtual banks are not full-service banks. No letters of credit, no large credit facilities, no trade finance instruments. If you're shipping containers from Shenzhen or importing goods from Bangladesh, a virtual bank alone won't get you there. They're fantastic for what they do, but they have a ceiling.
Got it. So they're a great starting point. What about physical banks? How different is that experience?
Almost the opposite in every way. Physical banks, your HSBC, Standard Chartered, Bank of China, are slow. Often 3 to 8 weeks to open an account. They require physical interviews with directors. Minimum balances can run from $50,000 Hong Kong dollars to 500,000. Monthly fees if you fall below that threshold.
Okay, that's quite a commitment, especially for a newer business.
It is, but in return, you get the full scale. Trade finance, letter of credit, large credit lines, forex hedging, dedicated RM, relationship managers, and something that's easy to underestimate, institutional credibility.
Right.
Some counterparties, some landlords even some visa offices, still want to see a traditional bank account. There's a reputational dimension to it that a virtual bank can't fully replicate yet.
So it really does depend on what stage you're at and what your business actually needs. Is there a way to have both?
That's exactly what I recommend. And it's what I call the dual track approach. Open a virtual bank immediately to get cash flowing, while at the same time applying to a physical bank for the long term. Many successful companies in Hong Kong run both. The virtual account handles daily operations, payroll, fast collections. The physical bank handles trade finance, large reserve, and acts as a safety net if anything goes wrong with the virtual account.
That is such a practical solution. And I imagine it takes the pressure off too. You're not sitting around waiting for 8 weeks just to start trading.
Exactly. You're operational from day one, and you're building towards long-term stability at the same time. In our experience, working with SME clients, like Standard Chartered dedicated SME teams, tends to offer a more structured onboarding pathway for newer businesses. That's not a criticism of other banks. It's just a reflection of where each bank has chosen to focus.
I genuinely didn't know that. That's a kind of insider tip that makes this conversation valuable.
Yes.
All right, so let's say someone has decided which bank they want to go after. What does the actual application look like? You use this term business proof portfolio. What does that mean?
This is the area where most people come stuck, and it's the one I'm most passionate about. Because getting it right makes such a difference.
Okay.
So here's the mental model banks are using now. They're not asking, does this company exist? They're asking, does this business make logical, verifiable sense in the real world? Or is it just a shell company for moving money? That shift in mindset is everything. The business proof portfolio is a coherent narrative package that answers that question convincingly.
Okay.
There are two layers. The first is your baseline legal documents, what I call the minimum viable set. Your certificate of incorporation, your business registration certificate, your NNC1 or NAR1. So that's your incorporation form or annual return listing shareholders and directors.
Okay.
And of course, your articles of association. Now, here's the critical warning. Having just those 4 documents will no longer open a business bank account at any major Hong Kong bank. You'll be rejected within 48 hours. I've seen it happen. These documents prove you exist, but they say nothing about whether your business is real.
So what's the second layer?
Okay, this is where it gets interesting. You need what I call proof documents. Let me take you through them one by one. The first one is a 1-page business plan.
Okay.
And I do mean 1 page. Concise and factual. Like,
Right.
what do you sell? Who are your suppliers? And where are they based? Who are your customers? What's your expected monthly transaction volume? How do you receive payment and pay suppliers? Banks use this as the blueprint. Every other document must be consistent with it. One contradiction and it's an automatic rejection.
So it's almost like the bank is testing your story, checking whether everything adds up, right?
Exactly that. And it's not a business plan and more of a logic test. And it catches people out more than you think. The second document type is draft or signed contracts, like supplier purchase agreements, customer sales contracts, letters of intent. I had a client once, brilliant business, completely legitimate. And they came to me with a verbal agreement with a factory in China. The bank treated it as if it didn't exist. A signed contract with a Shenzhen supplier, specifying product, quantity, unit price, and delivery terms, that's strong. A verbal agreement, banks don't count it.
That's strict. So a handshake deal, even with someone you've been working for years, means nothing on paper?
Nothing. Not to a compliance officer. Get it in writing. Even if it's just a simple one-page agreement, it doesn't need to be a 30-page legal document. Third are invoices. Supplier and customer invoices. Ideally, a match pair showing your purchase cost and your sale price. Banks will check that the dates make logical sense. You can't sell before you buy, right?
Yes.
And if your documents suggest you did, that's a flag.
All right. Okay. Oh, this is a simple thing to get wrong through, especially if you're a startup juggling with 100 things at once.
It happens all the time. And the banks won't call you to ask about it. They will just reject the application. So it's worth double-checking the timeline across every invoice before you submit. Fourth, and this is one for earlier stage listeners, supplier quotations. If you're pre-revenue and don't have invoices yet, formal quotes on supplier letterheads are acceptable evidence of serious business intent. It shows the bank there's real activity happening, even if you haven't transacted yet.
Good to know.
Yeah.
So there is a way in, even you are just getting started.
Absolutely. You don't have to be a fully trading company to open an account. You just have to demonstrate genuine intent. And then fifth, and I always say this, is the most overlooked one, is a source of funds explanation. Where does your initial capital come from? From your personal savings, shareholder investment, prior business income? Be specific. Banks need to trace the origin of every dollar going into the account. It sounds intrusive, but this is non-negotiable under Hong Kong's AML framework.
So transparency really is everything here. Don't assume the bank will give you the benefit of a doubt. Spell it out for them.
That's exactly the right mindset. The more clearly you explain your story, the less room there is for the compliance team to imagine a different one.
That is so much more comprehensive than most people expect. And I'm thinking about our listeners who are entering the Hong Kong market from overseas. A European or US company using Hong Kong as a gateway into China and APAC. This probably sounds challenging. Any reassurance?
Genuinely, yes. If your business is real and you're operating it properly, you already have most of the material anyway. It's really about organizing it clearly and presenting it as a coherent story. Think of it not as a compliance paperwork, and more as your business pitch to the bank. The cleaner and more coherent your story, the faster and smoother your approval.
Now, can we talk about things that go wrong? Even with the best preparation, there are pitfalls. What are the hidden traps that catch people out, especially those new to Hong Kong's regulatory environment?
Okay, there are three that I see time and again. I call them the three silent killers because they're not obvious. And by the time you find out, you already lost weeks. The first is handling third-party funds. This is probably the most dangerous thing you can do, and it catches out a lot of well-meaning founders. Third-party funds means receiving money from or sending money to someone who is not a direct counterparty. Okay? Using your company account to accept a payment on behalf of a friend, a relative, or a related but separate business looks exactly like money laundering to a bank's compliance algorithm. And here's why it's so serious. Once you're flagged for this at one Hong Kong bank, opening an account at another Hong Kong bank becomes nearly impossible for 12 to 24 months. Your account should handle only transactions directly tied to your company legitimate operations. That's it.
That one surprises me every time I hear it, because I can imagine so many early stage founders doing this completely innocently, just trying to be helpful or flexible.
Exactly. And the second killer is what I call the paper company rejection. If you have a Hong Kong registered address, but no genuine business substance, no employees, no local operating costs, no clear reason why you specifically need a Hong Kong bank account, banks will be very suspicious. The regulatory logic is quite simple. If your company has no local expenses, why does it need a Hong Kong bank account? The answer banks fear is to pass money through from one offshore entity to another. A virtual office address alone is no longer considered sufficient operational footprint.
Okay, so substance over structure. Got it. What's the third?
Information inconsistency. If your company name is spelled differently across two documents, if your address format varies, if a director's name appears with or without a middle initial, some banks will reject the application outright without even calling you to ask for clarification. You resubmit and wait for another 2 to 4 weeks. I had a client lost 6 weeks because of a single hyphen. The director's name had a hyphen on the business registration certificate, but not on the NNC one. One hyphen. 6 weeks lost. I still think about that one. The fix is simple though. Create a master data sheet with every piece of information exactly as it should appear, and copy-paste from it across every single document.
Okay.
Never type the same thing twice.
Okay, that is very useful. So are there certain industries that face a harder time regardless of how well they prepare?
Yes, and I want to be honest about this because it saves people a lot of wasted time. There are 3 categories where physical bank approval is very difficult, no matter how clean your documentation is.
Okay.
First one, cryptocurrency and virtual assets. There is near zero approval rate at traditional banks. Second industry, money services. For example, remittance,
Okay.
currency exchange, only 5% approval rate at physical banks. Third industry, precious metals and stones, 10% approval rate at most, due to trade-based money laundering risk. So if you are in any of these sectors, don't spend 6 weeks applying to HSBC. Work with the specialists who know the landscape. And one more thing worth flagging, especially for our APAC-focused listeners, complex ownership structure are a growing challenge. If your Hong Kong company is owned by a BVI holding company, owned by a Cayman entity with nominee directors, banks will struggle to identify the ultimate beneficial owner, the UBO. An enhanced due diligence risk kicks in. Where possible, simplify your structure before you apply. Straightforward ownership chains open faster with far fewer complications.
Let's say you've done everything right and the account is open.
Okay.
Congratulations on the milestone. What does good account maintenance look like? Because I have a feeling it really isn't just set and forget.
Not at all. And I think this is the part people expect the least. Here's a simple way I frame it. 80% of account closure are caused by just 5 behaviors. What are they? 1. Unexpected large transactions without any explanation. 2. Third-party funds, which we have already covered before. 3. Failing to respond to a compliance query within 7 days. 4. Transacting with high-risk counterparties in crypto, gambling, or sanctioned jurisdictions. And 5. This one surprises people. Dormancy followed by sudden activities. By that, I mean a company that's been inactive for 6 months and then suddenly moved large sums. From a compliance point of view, it looks exactly like a dormant account that's been activated for a specific purpose.
So the message is stay active, stay consistent, and keep the bank in the loop?
Exactly. Here's one specific habit that I believe reduces account closure risk significantly, and that is proactively contact your RM, relationship manager, once every 3 to 6 months, even if nothing has changed. Just give him or her a simple message. For example, okay? That one simple habit signals transparency. You become a known quantity to the bank rather than a hidden risk they need to investigate. It takes just 5 minutes, and it protects something that took months to build. Build your banking relationship like any other business relationship. It needs ongoing care.
Po, this has been invaluable. And I think our listeners here in Hong Kong or thinking about expanding into China and wider APAC are walking away with a real blueprint today. Before we wrap up, can you share your top 3 takeaways?
Happy to. 3 things I want every listeners to remember. First, banks verify business logic, not just existence. Your certificate of incorporation is a starting point, not a finish line. Build your business proof portfolio, your one-pager, your contracts, your invoices, your source of funds before you walk in the door. Second, consistency is non-negotiable.
Right.
One spelling discrepancy can cost you 6 weeks. Create a master data sheet and use it for every document, every form, every communication. Copy paste, don't retype. Third, the account is never permanently open. Maintenance is everything. Stay active. Stay within your declared business profile. Respond to compliance queries fast and check in proactively with your bank. The banks that close accounts are not looking for reasons to shut you down. They're just responding to silence and inconsistency.
Perfect. 3 things that would have saved a lot of people a lot of time and money. Thank you so much, Po, for being such a sport. And thank you for being our ever first video guest. You were completely natural for the record.
Thank you, Anne. I admit, I was terrified at the start, but you make it very easy for me. And to everyone watching and listening, I hope this was useful. If you have any questions about your specific situation, please don't hesitate to reach out to us in Acclime.
And that's a wrap on episode 13 of Amplify Asia. What a way to kick off our video era. We've covered the virtual versus physical bank decision, the dual track strategy, how to build a business proof portfolio that actually gets approved, the 3 silent killers to avoid, and how to protect your account once it's open. Preparation, transparency, and consistency, your 3 best allies. If you like personalized guidance on your specific banking setup, whether that's choosing the right bank, structuring your documentation, or navigating a complex ownership structure, reach out to us at Acclime. The link to book a call with our team is on the show notes. Now, since this is our YouTube debut, if you are watching on the channel, please do hit subscribe and turn on notifications so you never miss an episode. And for our loyal audio listeners on Spotify and Apple Podcast, you can now find us on YouTube too. Link is in the show notes. Until next time, keep amplifying Asia. Thank you, Po.
Thank you, Anne. Goodbye.